Good morning, everyone. This is Brooke Chanfiki here from LegaSHE. I'm your host this morning with my dear friend, Bob Knakal. Before we get started with Bob, the LegaSHE's purpose is to educate sophisticated people at the top of their careers in this niche space that is commercial real estate. How do people sell buildings? Who gives money to large owners of buildings? How does someone enter this space as an owner or investor? These are all topics that we touch on here. I really want you to walk away understanding the bigger, bolder cousin of residential real estate, which is commercial real estate. If we don't talk freely about these things without gatekeeping, no one really understands commercial real estate who is new and entering into this space. And my guest today embodies this transparent, collaborative philosophy. Today, I have the infamous Bob Knakal, joining me here live. We've known each other, Bob, a long time. It's been over 15 years that we have had the blessing of being connected to one another. We've been on the Stoller Report together, you remember.
Of course.
Michael Stoller used to run a fabulous panel show weekly. I think he started in 2001, had tons of guests. And Bob and I were guests on that show many, many, many moons ago when we were younger. And both were still fabulous, by the way, but even younger. And so let me give you a little bit of background on Bob. You want to know why it is Bob is so special? It's because of Bob's mindset that Bob is so special. But let me give you some stats, because Bob and I both have math and science backgrounds, so we love the statistics. Bob is highly influential in New York City's commercial real estate market. His career spans over 40 years. He co-founded a firm in 1988, Massey Knakal. He has the direct history of brokering investment property sales. As of last week, he's up to 2,339 properties that he has sold in New York City. And we're pretty sure this makes him the highest sales broker in the entirety of New York City. But, you know, he's humble. We bow down. I know you're still humble about it. You continue to shape commercial real estate industry through your use of technology, which is really unique. I might ask Bob to describe the map room a little bit, explain what that's all about. But your map room is legendary in New York circles, and getting access to it is an amazing experience for folks who have never seen it before. You now have your own brokerage firm, your own advisory firm, which is something we definitely will dig into. I want you to have all the space to talk about that. You like AI, you like social media, and for everyone listening this morning, real estate folks aren't necessarily the most open to AI and social media. You're at the leading edge. Your mindset puts you at the leading edge. And so we really want to dig into that with you this morning. We understand, you know, why you're in that space. We're going to start though, Bob, if you'll indulge me. We're going to start with leadership, because this group here, LegaSHE attracts a very diverse group. My ethos is open communication. Therefore, we have real communication, we have real chats about real topics, and that brings lots of people forward. So when I looked at our guest list today, our guest list is completely diverse in terms of background. Folks are here to learn. They want to learn from you, but I really want to learn from your mind. We want to learn about your style and your leadership style before we talk real estate. It all starts here. And one of the things that I want to talk to you about is servant leadership, because I know that this is your mantra. You marry your emotional regulation and emotional skills and motivational skills together with all your technical skills. So would you start taking us on the journey of your leadership style? Walk us through servant leadership and why it's so important to you and should be important to us as well.
Sure. Well, Brooke, first of all, it's a pleasure to be with you this morning, my friend. Thank you so much for having me on the
Of course.
show. Good morning to everybody out there. So happy to be with you today. Yeah, when it comes to leadership, I think that Paul Massey and I, when we started Massey Knakal back in '88, for years and years and years, we were always the first two in the office. And when we had a small 800 square foot office, it was the two of us sitting there early in the morning chatting. And when we had 50,000 square feet of space at 275 Madison, it was still the two of us in there early, just talking to each other. And in those days, there were times when we'd sit there and we'd say to each other, what happens if nobody shows up today? And we were looking over this big sea of bullpen, and it was empty. And we realized right from the very beginning that this business is all about people. I think that from a real estate broker's point of view, it's not really the real estate business, it's the information and the relationship business. And from the perspective of someone that owns a brokerage company, it was all about your employees. It's all about your people. Everybody says, oh, it's client first, client first. And yes, it is client first, but as the owner of a brokerage company, your clients are your employees, not the people that you do business with. Those are secondary clients, simply because if you don't have people inside to service the outside clients, you can't service them. So there has to be a recognition that it's your people first. So every single owner of a brokerage company and key executives at brokerage companies talk about servant leadership. Many talk the talk, very few actually walk the walk. Walking the walk is putting your people first. How do you put your people first? You invest in them significantly with training, with guidance, with mentorship, and you implement a true servant leadership type of philosophy, which really revolves around building people's self-esteem, building their confidence, letting them know they can do better than their best. And also, one of the key elements that people overlook a lot is that people want to feel like what they're doing is important and helping the company achieve its overall objectives. And if you look at all of the studies that have been done on job satisfaction, the casual observer is going to say, oh, well, it must be money. If people are making money, they're happy. And in almost every survey that's been done, wanting to feel important and integral to what the company is doing and to feel valued is always ranks higher than money. And so it was always important to us to first establish what the expectations are, help folks understand how they can achieve those objectives, and then to have them understand how they fit into this whole mosaic of the company ecosystem and how that company is trying to achieve its objectives. So it was really remarkable, Brooke, when we'd talk to the folks who stuffed mail in the mailroom and said, hey, you know what? You're doing such a great job. Our return rate is so low and you're saving us money. You went to the post office and figured out how, if we boxed our own stuff by zip code, we could save 3 cents on a piece of mail, and you're saving us thousands of dollars. And we really, really appreciate what you're doing. And you know what? That mail got done perfectly.
Yes.
When we talk to the receptionist and say, hey, you know what? We noticed how welcoming and warm you are when people walk through the door. You're the first impression that people have of this place, and you're really doing a fantastic job. And I tell you that for months, the people that walked in that office, it was like their long lost aunt or uncle walked in. And, how are you doing today? How's your day? Can I get you a cup of coffee? Can I get you some water? What can I get for you? And it just gave everyone so much pride in what they were doing. And so I think when you look at a servant leadership mentality, Paul and I always wanted every one of our employees to do better than we did. And so we invested heavily in their training, invested in their professional and personal growth. tried to help them inside the office, outside the office. And so if you look at the history of Massey Knakal, we ran that business for 26 years and 46 days before we sold it to Cushman & Wakefield. We had a lot of things that were really tremendous accomplishments for what the company did. We were a little popcorn stand. We were competing against big regional, national, and global firms. CoStar started tracking the market in 2001 from a building sales perspective from 2001 to 2014. The number 2 company in New York City had sold about 1,300 buildings. We sold over 4,000. So we lapped the field by more than 3 times. Show me any company in any market that has done that. And we did it for 14 years in a row. And so we're very proud of that. We sold the company for $100 million, which is something we were very, very proud of. But I will tell you without a doubt, the thing that I'm most proud of about what Massey Knakal was the tremendous legacy that we created of building people up and changing the lives of people around us. And today, in the New York City investment sales market, there are 30 companies or divisions of companies that are either owned by or run by people that learn the business at Massey Knakal. And that is the thing that I am by far and away the most proud of.
I am so thrilled that we're starting here, because there is something I learned the other day, and you may know this already, but I want to share it with you and with the audience, which is a little story. In the 60s and 70s, the US military, which as we know doesn't really have marketing and branding as its main ethos, right? So the US military was trying to describe all the essential skills that its leaders needed. And so they labeled a bunch of skills hard skills. Do you know why they called them hard skills?
No.
Because they were related to machinery and the operations of weaponry and processes. It was technical. And they, again, not having a CMO that was thinking ahead about how the branding of soft skills was going to play over the next 40 years, they called the crucial interpersonal skills of emotional regulation, empathy, teamwork, adaptability, resilience. They called those soft because they didn't have to do with machinery and the operations of machinery, the technical skills. So I heard this not that long ago and I said, oh, that could have used some branding, right? Because in order, Bob, for you to be where you are today, you had to recognize that what we mislabeled soft are actually the most crucial skills that are necessary in order to build a business to the level that you've built it. It's the interpersonal and the emotional empathy, resilience, all of the things that allow you to work with human beings, with other people. And that's exactly what you did in building up all of the businesses and then seeding other coaches. You were the coach that seeded the other coaches that went on to build businesses. So I heard that and I found that absolutely fascinating, because to me, when I see your platform online, and I do want to talk more about your platform, that's what you do. You bring forth real interpersonal skill. You humanize the work that you're doing and you make sure people feel valued.
Yeah, I think that's so important. I mean, everybody, you want to be successful, you want to make money, you want to do all those things, but you really want to feel appreciated. It's said that among the cruelest things you can do to someone is not give them any feedback at all in terms of how they're doing. And there are some situations where leaders of very big companies give zero feedback. Not, hey, you're doing a great job, you're doing a terrible job, you're doing this wrong, you're doing this right. Absolutely awful leadership skills.
Yes.
And so I think it's important for people to get feedback, give them constructive criticism, input on how they can do things differently or better, or just, hey, a pat on the back. Hey, you really did a great job with that. And it's remarkable how people react to that kind of feedback.
Yes, and you absolutely live it every day, which is one of the reasons why I'm so thrilled that you're with me sharing some of these vignettes. So I'd like to shift us into talking about your new firm. I'd love to dig in a bit on AI and your use of new tools and why you think that is so important in real estate today.
Right. Well, I think, and I will be the first to say that I am probably the least technologically savvy person in the whole industry. I'm very happy my cell phone goes on in the morning. So, but I'm a very, very big proponent and fan of Benjamin Hardy and Dan Sullivan's books. And one of them is Who Not How. And
Yes.
so I realized that it was going to be very important to get ahead of technology. And so I said, it's a great idea, but the main thesis of that book is when you say to yourself, hey, this is a great idea, how am I going to do this? You're asking the wrong question. The question should be, who am I going to get to do this for me? So I went out and hired Seth Samowitz as my COO, who is an AI expert. The guy has worked in driverless cars. So if you can make a car drive by itself, you can figure out how to sell buildings. So,
Bob, that's fascinating. I don't mean to interrupt, but I just have to say, so you are married together with an AI guy on your team.
Absolutely.
Dig into that.
Yeah, and I will tell you, Brooke, what came about, and I think, look, going to 40,000 feet on this issue, I think that when I started in my career in 1984. I had no phone, no cell phone, no computer on my desk, no fax machine. We carried rolls of quarters around in our pocket to make calls from the payphone at the corner. And over the past 40 years, the world has changed very, very significantly. And but I think the extent to which the world is going to change over the next 5 years is even going to be more significant than what we've seen over the last 40 because of AI. If you look at some of the AI tools that are out there, something comes out, you say, hey, this is an absolutely fantastic and powerful thing, and you use it for 2 months, and then something new comes out that's bigger, faster, stronger, more capable, and the thing that came out 2 months ago that was so cool is a dinosaur already. So the rate of change within this industry is just fascinating. So we are adapting to and using AI in 3 main ways. Number one, we're using it on the prospecting front, make prospecting more effective and efficient. Number two, we're using it on the deal execution front for making the process of funneling. And really what marketing is, when you're marketing a property, it's a funneling process. You start with thousands of people, break it down to 100, get it down to dozens, get it down to a few, and then ultimately negotiate with a few people. So it's been highly effective in helping us with deal execution. And then the area where AI has probably the most potential, but will be the most challenging for the industry to implement, is on the data interpretation front. AI can do millions of calculations a second, but if you're putting bad data into it, you're going to get bad results out of it, no matter how great your algorithmic models are. So we fortunately have data sets that go back 40 years. And I will also tell you that the main premise of this whole data interpretation thing is based on the quality of the information that you have. And it's also important to know that absolute numbers are not nearly as important as the relationship between numbers in a data set. So for instance, if I tell you that in 2019 in Manhattan, the dollar volume of investment sales was $26.3 billion, you have no idea what that really means until I tell you that, at the peak of the market in 2015, it was 57.4 billion. And in 2020, during the pandemic at the trough, it dropped to 11.1 billion. So all of a sudden, the 26.3 starts to have some feel to it.
Yes.
And so if you have a data set over time, it's not the absolute numbers that matter. It's the relationship between those numbers. Are the numbers going up? Are they going down? To what extent are they going up or down? And within the analytics of real estate, it's also very important that the numbers are calculated in a consistent manner.
Mhm.
So that the relationship between those numbers in the data set have integrity. And if you don't use the same methodology, if you're calculating cap rates, are you looking at trailing 12? Are you looking at forward 12? What are you doing with vacancies? Are you making projections? How are you projecting? What are you using for projections? What's your stabilized vacancy factor? All of these things, if they're not done consistently, the relationships fall apart. And I've seen so many different research people over the years. Everyone kind of has their own unique twist on how to do things. How do you group properties? If you have a retail store with 10 apartments above it, is that an apartment building or a mixed use building? Which bucket does it go in? And if you say, well, it has a store on the ground, so that's a mixed use building. Well, the Empire State Building has stores on the ground floor. Is that a mixed use building or is that an office building? How are you doing these things? So, fortunately, we have data sets that have used the same exact methodology for 40 years. We're applying AI models to those data sets and coming up with some extraordinarily predictive information, or especially relative to the land market in Manhattan and the multifamily market in New York City. And it's just really, really exciting, groundbreaking stuff. And I think it's funny that I'm the one talking about this stuff because I'm happy this cell phone goes on, but I have great people around me that are helping me with the implementation of these things.
You're on the leading edge. And by the way, I love Who Not How, and I loved 10x is greater than 2x, which is his other book. You're on the leading edge, and you're surrounding yourself with folks. And I think that's folks who understand the space incredibly well and eat, sleep, and breathe the tech specs and the how to do the actual scraping of the data, right? Versus your intuition. Your intuition is the 40 years of understanding to call the Empire State Building an office building, but something that has 40% retail income, a mixed use building, right? Like there's that math understanding that comes over your life that allows you to lean into your intuition and then to have somebody else codify it via the technology. Here's how we need to scrape the data and understand the relationship. So I love this conversation with you, Bob, because you may know that my background is physics, finance, and econ. So when we get into numbers and specs and data, my eyes light up. And so
well, you'll love what we're doing with the Knakal Land Index. Then we're coming out with, most companies in New York will tell you that land values in Manhattan averaged $400 a foot last year. And that's like saying last year the average price of a peach, a bowling ball, and a 2x4 is $11.50.
Doesn't help anybody, right?
So we've disaggregated that data into 5 buckets: residential rental land, residential condo land, hotel, office, and then a miscellaneous bucket. We have that data for 2,417 development site transactions that have happened in Manhattan south of 96th Street going back to 1984. We're taking that data set and applying a number of metrics to those fluctuations in value. Those metrics include in each of those silos. We're looking at the dynamics in rental land, for instance. We're looking at how rents have fluctuated, how have occupancies fluctuated, what's happened on the legislative front. But then we're also comparing those fluctuations to macroeconomic data, interest rates, inflation, lending rates, S&P 500, Dow Jones Industrial Average, price of gold, price of oil, consumer sentiment, and about 30 macroeconomic factors. And so we believe that our models are going to be able to tell us, hey, this factor or this group of factors will impact and be predictive of what's going to happen with changes in land value. So we hope to come out with something that says, hey, when interest rates drop by 75 basis points and the price of eggs go up by 15%, the hotel market land is going to rally in the next 10 months. And so it's really, really cool, groundbreaking stuff. It's stuff that nobody has done before, and I don't think anybody really has the ability, because the longevity of the data sets with the same exact methodology just doesn't exist. And so, and it's extraordinarily difficult to go back and do retroactively. So
Yeah.
we're really excited about what we have and how this is going to help our clients, because at the end of the day, we're here to serve our clients. It's all about the client. It's all about putting them in a position to make a more informed decision about what they're doing and get a better result, a better execution. And I think that we will be able to help our clients better than anyone else, based upon the quality of the input and the data we'll be able to share with them, and the insights into the market. You know, and so it's really, really exciting stuff.
So let's talk about the client a little bit. You are aware, right? You love the data and the statistics. You're aware that in the next few years, we're going to have a great wealth transfer. There are going to be a lot of folks that are coming into wealth from retirement and passing of individuals ahead of them, and that family wealth will be moving. So you're going to see an incredible changeover in who the owners are of many of these properties. What if you were speaking to a client, pretend I'm someone who's about to walk into or come into property ownership on the Upper East Side of Manhattan, in the Bronx, somewhere within New York. What would you be telling me today about selling that property? Right? I'm new. I'm trying to figure this. What do I do with this?
Yeah, well,
Right?
before I would tell you anything, I would ask you a bunch of questions,
Of
because
course.
I think a lot depends on, what your objectives are. What is your risk tolerance? What do you want to actively manage and own property? Do you want a more passive interest in real estate? Do you want to get out of real estate altogether? It's interesting how, real estate folks generally are really, really into it. I would say that the overwhelming majority of my clients probably don't own any commodities, don't own any stocks or bonds. Every nickel they have is invested in real estate.
Yeah.
And they're really, really into it. But sometimes the next generation is not. And they're into other businesses, other things. They could use the capital that has been accumulated within the real estate portfolio to advance other interests that they have, or other businesses. So a lot of it has to do with what are your objectives? What are you trying to achieve? Are you all about trying to come up with a great estate plan to take care of the next generation or two? Are you looking to expand a different type of business that you're in? So it's a lot of questions, and trying to figure out what the objectives of the client are. And then there's a number of strategies. And, I found over the years that my best relationships come from conversations I have with people where I advise them not to sell. And there are often times I do
Mm.
that, because there really are times when you shouldn't be selling. And, sometimes people look at me sideways and say, "Hey, Bob, why are you advising me not to sell? You're not going to make any money." And I say, because I treat every client like they're my mom or dad. And I think if brokers do that, you're not going to make many mistakes. What advice would you give to your folks if they own the property? Should they sell it now? Is there a reason why they shouldn't? Often there are a lot of reasons why you shouldn't sell. Maybe the zoning is going to change. Maybe something's happening in the neighborhood that's going to change value, or maybe just it's not the right market timing. One thing that's really interesting about the real estate market is that it always has been, is, and always will be cyclical. And sometimes you could be the most ignorant investor in the world, but if you jumped in at the right time and jumped out at the right time, you look like a genius. And you could be the smartest person in the world, and if you jumped in at the wrong time and out at the wrong time, you look like you're not such a great investor. So a lot of it has to do with timing, and by staying on top of the market and really understanding how the market's fluctuating, where the market is in the cycle, you can give a client good data upon which to make decisions. And that's, at the end of the day, that's what we're really doing. We're really advisors. We're not just transaction mechanics. We're trying to advise clients in terms of what to do, and then to the extent they want to do something, we'll help them execute that plan. but oftentimes you need to take a look at things from a very broad perspective. What's the timing like? Where is the market in the cycle? What are you looking to do? Yes, values are low. And we have some clients who say, yes, values are low and it's probably not the right time to sell. But if I wait till my property goes up in value, the replacement property that I want to buy in Florida is going to be much more expensive. So I rather sell low and buy low. So sometimes there are reasons why people need to transact. The old reliable death, divorce, taxes, partnership disputes, things that give people a motivation to sell that is out of their control. And sometimes there are very compelling strategic reasons why people may choose to sell. And our job is to go through all those different permutations, offer them options, and give them advice on what will happen if they choose path A, path B, or path C.
You often post on social. So for anyone who isn't following Bob Knakal, make sure you do, because Bob offers his Knakal nuggets. But you often offer examples of deals that you have structured incredibly creatively. Because to your point, and I like the way you responded when I asked you my question, I have to ask you, Brooke, a whole bunch of questions. I need to ask the client a whole bunch of questions. I can't make a recommendation because the recommendations I'm going to make are going to be very layered. It's going to be a very layered approach. There's going to be lots of options, so many paths. And what I've always found in our conversations is and I hope I'm not revealing your secret sauce, but you're very transparent. But I've always found in our conversations that you are a master at the menu of here are all the different ways we could do this. And that's what I see in a lot of your social media posts where you do the postmortem. Here's something I worked on years ago, not that long ago, and here are all the different ways that we thought through what would be the best way to maximize the value for the seller. So can you walk us through the most interesting deal? And any size, any era, like, do you have one that is in your heart implanted? Like that was wild. That was a wild ride.
Yeah, Brooke, I will tell you that I think every deal is a great deal. And
you're a good client person. You're fantastic.
The most important deal is the next deal. And I've always felt that way. I will tell you, there have been a lot of great ones over the years, but I think rather than talk about one deal, because it would take me 15, 20 minutes to really get under the fingernails of these deals. I would say that, I really enjoy sharing the ins and outs of these deals because, I got on social media in January of 2023. And I knew probably in November of 22, I was going to give this a go, and I wanted to see what it was like. So I was going online, looking at different posts people were doing. And most brokers were putting up, hey, we just listed this, or we just sold this, and it was this size, and here was the price. But what people really want to know is, hey, how did it happen? What were the challenges that you faced? And what were the actions that you took to overcome those challenges? What were the results? And what did the clients think? And so, I in wanting to come on social media and try to be slightly different than what most folks were doing, I said, you know what, maybe these deal stories would be interesting. And, it's so interesting that when you're a broker and you're working these deals, you're really living, breathing, and, blood, sweat, and tears, everyone. But all of these little details become so important that you don't forget them. And, we're here, it's 9:39 Eastern time. I don't remember what I had for breakfast this morning, but I could tell you, ask me about an address from a deal I sold in 1993. I probably can give you a lot of details about that transaction because they become so vibrantly important, and you're kind of living and dying with every little thing that happens on them, and side by side with your client, trying to get the best results possible. So I would say that I like the deals, especially that You know, they say every deal dies once or twice before it happens. And there are several that probably have died 5 or 6 times before they happen. But, you know, we continue to love to keep hammering away at these things.
I love your response that you love all the clients and all of the deals equally, because we do love everyone we work with and all of the deals that we work on. And real estate folks truly are, I'm going to borrow your words, into it, really, really into it. So one of the things that I want to just explore a little bit with you is there is a new generation, and the new generation is coming up and they're figuring out. And when I say new generation, I'm not necessarily referring to the youngest folks. I'm talking about the folks that are mid-career. They're really successful. They've done great things in their worlds, whatever those worlds are. And now they're looking at real estate and they're saying, oh my gosh, I kind of haven't paid attention to this. And maybe I do need to know a little bit more about it. Maybe it's something that does spark my interest, and I just want to understand, because I'm really sophisticated. I understand niche plays. I bet on myself. Real estate is a really good alt. It's a really good alternative space to look at. So what would you say to someone who's maybe in their 30s or 40s, late 30s, 40s, who's starting to think about investing in or purchasing real estate, maybe together, maybe, but they're thinking about that. What would you tell them their challenges are going to be and their opportunities are going to be?
Yeah, well, I think real estate is very much, as I said before, it's very much an information and relationship business. So I think to really do an effective job, and I'm speaking very, very much from a broker's perspective and not an investor's perspective, because I
Please.
don't own real estate, I don't buy real estate, but I would think as a buyer, you would want to know the market extraordinarily well. The more market info you have, the more market intel you have, the less likely you are to make a mistake. So if I was going to invest, if I was going to become an investor, I'd pick a property type that I would specialize in, so I really understood everything about that. I would get to know a market or markets that I wanted to invest in. I'd build relationships with the people that could help me execute those transactions and understand the market well enough so I didn't make mistakes. I don't want to buy a property with some vacancies assuming I could get a rent of X and I can only get X minus 20%, because that's going to impact the performance of my investment. So very much an information and knowledge-based business. I will tell you, I think the characteristics that I've seen in brokers that have done extraordinarily well and risen to the top of the brokerage ranks are probably, there's a lot of overlap with investors that have done extraordinarily well. But the 3 characteristics I see in brokers who get to the top of the industry are: number 1, they are an expert in a narrow niche of the market. And I always tell people, if you want to be an expert, pick something that is small enough that you can understand every single thing about it, but large enough you can make a good living. Secondly, passion. You have to have passion. You have to love it. No matter how good you are, the market, as I said, has been, is, always will be cyclical. There are ups and downs that are completely out of your control. So loving it will help you persevere through the tough times and stick around for those inevitable good times that will return. And thirdly, it's the folks who can use discipline well that succeed. And I say discipline from the perspective of using it as opposed to having it. Discipline is a tool. It's available to everybody. You don't either have it or don't have it. It's how you choose to use it that matters. And I will tell you, a lot of discipline comes down to belief, doing the right things, believing that you're doing the right things, continuing to do them, even though they may not be showing results or bearing fruit immediately. But I use the stonecutters creed of pounding the rock as something that is very applicable to real estate. And the pounding the rock for the stonecutter is, stonecutter goes into the shop in the morning and big block of stone in front of them, and they take a mallet and they whack the thing 99 times and nothing has happened. And the 100th time that rock splits in half and the casual observer will say, oh, that 100th blow must have been different. It must have been a different mallet, must have been a different angle, must have hit it harder. But the stonecutter knows that that 100th blow is no different from the other 99. It's just the other 99 that came before it allowed that 100th one to work. And in the same way, so much of what we do in real estate is not glamorous. It's a lot of what we refer to as blocking and tackling. You know, focusing on your market presence, making your calls, sending out your emails, sending out texts, sending out hard mail, which is a very, very underrated medium. Doing your networking, creating content, being active on social media, meeting with people, all of those very fundamental things, many of which are not glamorous, but you have to do them consistently and do them over and over and over, you know, day after day, week after week, month after month, year after year, decade after decade. And the results really start to pay off.
Yes, no, I love the advice that you're offering, and I'll summarize it at the end to make sure that everybody walks away with the right soundbite on how to show up, especially as it relates to just being disciplined. And I like very much what you said about it's not having, or it's not being, it's having the discipline and accessing the discipline for yourself, because we can literally make anything for ourselves. We are our own worst enemy. If we've decided that we can't do something, well, then we can't. If we've decided we can, guess what? We will.
No,
But
you have
we
to
will.
you have to believe
Yeah.
that you can. And one of the great things,
100%.
you know, a great blessing that we all have is that most powerful thing in the world, which is free will. And free will allows you to do anything. You can fundamentally change anything about your life at any moment. This very moment, you could decide to change anything about your life very, very fundamentally. And it's just a matter of deciding that you're going to do it and then having the discipline to stick to it. And
Yes.
you know, I love the quote from Abe Lincoln, who said that discipline is choosing between what you want now and what you want most. And it's just a question of focusing on that and understanding what it is you want most and why.
So let's dig in, because you and I are ourselves in social media now. We are out there. We've decided, after very, very wonderful careers in commercial real estate, hey, there's this little space over there. I need to go figure that space out. What would you say to someone who is resisting, potentially, you know, sort of resisting this space, resisting the power of marketing via this vehicle, resisting putting themselves out there? I love your, you know, sort of the ethos of, you know, don't be shy, just go for it. Well, I think there's a lot of real estate individuals who are struggling with, should I do that? Oh, I don't know if anyone wants to hear me. Do they really want to hear what I have to say? How might you help them? What might you say to someone who's considering getting themselves out there but is a little stuck?
Yeah, well, I think understanding the horizon within the real estate industry. I mean, let's look at it.
Yes.
The overwhelming majority of transactions are done by high net worth individuals and families, and not institutional. The institutional market is a very, very thin part of the market. In Manhattan, for instance, transactions over $100 million generally never get above 3% of the total number of transactions. Sometimes it's 1 or 2% only for number of transactions. So the overwhelming majority of transactions are done by individuals.
Mm-hmm.
And in Manhattan, for instance, there are about 175,000 investment properties owned by about 250,000 people. I'm a very, very good cold caller. I can't prospect call 250,000 people.
Yeah.
So I've always said, if you watch what I read and what I say, you know, it's not who you know, it's who knows you. And so you have to use every tool available to you to become as known as possible. And so I think when you talk about market presence, and I talk about this with my coach, Rod Santamassimo, all the time, that, you know, you have to constantly be focused on market presence and explaining who you are, what you do, and hope that business comes to you, as opposed to you always having to go out and find it. So it's like the philosophy of, hey, if I'm going to sell a rare bottle of wine. I could go into a conference room with 15 people and get bids, or I could go into Madison Square Garden in front of 17,000 people and get bids. The probability is, it's not a guarantee, but the probability is that I'm going to get a better price if I go into Madison Square Garden than if I go into a conference room. So the more people that know you, the better, the more likely it is you're going to be able to achieve great things for your clients. And so you want to do everything you can to become known in the marketplace. And that includes all of those things I mentioned, of making the calls, sending the email, sending the text, sending hard mail, networking, public speaking, meeting with folks, and being on social media is one of those great things. We're having this conversation. I don't know how many people are listening, but if we put this on social media, it's available to tens of thousands of people.
Bob, you'll be amazed. You'll be amazed. It's going to be a podcast, and it will be on YouTube. It's going to be watched and watched and watched as folks are thinking about real estate and thinking about you.
And I think this whole issue of market presence is completely misunderstood by a lot of people. I could see where people say, hey, Knakal, you're doing all this stuff. It's all about you. You're stroking your ego by going to speak at this event, or flying over here to speak to this group of people, or doing this initiative or that initiative. And you know what? Those people just don't get it. It's not about me. What am I doing? Why do I do this? Because someone listening to this show right now may either be someone who will pay more for one of the properties I'm selling than anyone else, or know somebody that might pay more than anyone else for a property I'm selling. And who does that help? That helps my client. Yes. So everything you do, you're putting yourself, by increasing your market presence and increasing the number of people that know you, you are creating more optionality, and the probability of a great result for your client goes up. It's all about the client. And that's what these folks don't understand, is that if you're doing things like this, you're putting yourself in a position to get in the way of information and people who could potentially deliver a better result for your client. And it's all about the client. It's not about the person who is the intermediary.
Can I add a layer to that? I love this. This is a very layered conversation. And the layer I want to add is, Bob, you increase your surface area, right? So more and more people see you, but it's not just in service solely of the client. It's also so that the universe knows exactly what you are about and delivers to you the things that, like, you're putting yourself out there and you're saying, here is who I am. And these are my goals, and this is what I'm building, and this is who I want to work with. And this is right. So you're being really clear with your beingness, who you are, what you represent, and what you are all about, and what you can do. The more you're out there saying it out loud, even if at times it feels like you're saying it to the ether. I think this is also what people miss. They're like, well, but who are you talking to? And why are you doing this? Just go and focus in on that one-on-one convo. The more surface area you have, the more people know what you're about, what you stand for. And then people find you, because there's all these little nuggets, these little breadcrumbs, these little remnants all over the place that say Bob Knakal is the best investment sales individual in New York City, and you have an amazing team and it's built out around you. It's not Bob's ego. It's Bob being in service to helping people find you so that they can transact with you. If you're in a room quietly, how do they know who you are, what you stand for, what you do, what your goal is, where you're going, right? That you have to be out there. Otherwise, no one knows who you are.
Right.
Or they know you only through those small one-on-one safe conversations.
Brooke, the real estate business is completely a probability-based business. Everything is probability. I know that, like, for instance, in Manhattan, south of 96th Street, there's 27,649 buildings. Over 40 years, the average turnover of that stock of buildings has been 2.6%. About half the stuff that goes on the market actually trades. So at any one time, 5% of the stock of buildings is on the market. That's 1 out of 20. So if you're making 20 prospecting calls, 1 is probably going to be successful, 19 are not going to be. That's the reality. That's the probability of the business. In the same way, if 100 people know you, you're less likely to be able to successfully transact than if 1,000 people know you. It's just
Yeah.
probability based. It has nothing to do with anything other than trying to put yourself in the best possible position to
Yes.
help your clients in the best way possible and increase the probability of success.
We got a fabulous comment. I just want to share it with you, Bob. Yes, I'll be watching this multiple times. So we're doing something. We're doing something right this morning. I think I want to leave off with, well, before I'm going to thank you like 5 times before we head out, but I want to leave off with where are we going in New York City? New York is your playground. New York is your yard. You know this better than anybody else. If you had to encapsulate for everybody with your statistics brain, which works faster than all of the rest of ours, if you could pull that together and say, I think over the next 5 or 10 years, this is something that could be interesting in the commercial real estate space, please do share that with us. I'd love to
Oh,
learn more
there's
on that.
so many. This is a 3-hour conversation, Brooke, but
But we'll have to do this again then. We're going
I'll
to do
tell
it
you,
again.
that's right. I'll summarize it this way. I think that number one, never bet against New York. And New York is so tough. And I will tell you, one of the biggest inflection points in the history of Massey Knakal was right after 9/11. You know, we started the business in 1988, November of 88. By September of 2001, we had grown from 2 people to 21 people. So relatively slow growth. But after 9/11, every company was downsizing. People were being laid off. We went out, hired a director of HR, and 2 years later, we had 150 people. We knew New York was going to be resilient, it would come back strong. And when it did come back, we were perfectly positioned to take advantage of that. So we didn't bet against New York then. I wouldn't bet against New York now. But we do have some issues that are somewhat troubling. Mainly the fact that public policy and the way the real estate markets operate have never been more highly correlated. We have now a situation where, you know, it's always been for 40 years, we've had a supermajority of what we'll call anti-real estate folks in the New York State Assembly. In the New York State Senate, it's always been a very thin majority one way or the other. Today, there's a supermajority of anti-real estate folks in the Senate. So we do have very significant political headwinds that we're dealing with and need to overcome. But I do believe that the market will come back. I think we're heading into a period where we're going to see unprecedented turnover. And I was on CNBC several months ago, and I said it's going to be the biggest sell-off in the history of New York City. I don't know if sell-off was really the right word, because a lot of it is not going to be discretionary. A lot of it is going to be forced, but there will be a turnover of ownership unlike anything we've ever seen. Of that total stock of buildings, I mentioned the average turnover is 2.6%. The highest turnover we ever saw was 4.3%, which occurred in 2012. I think we're going to see a year or two where turnover is going to be 5 or 6%.
Wow.
And so I think we're heading into a very, very dynamic time, a great time for the brokerage industry. I think that, again, we're in an election year. What happens in the election could have a profound impact on what happens in the real estate market. There are scenarios where, to the extent capital gains taxes are going to go up significantly, we could see a really unprecedented, maybe 7 or 8 or 9% turnover in 2025 if capital gains taxes is going to increase in 2026. But then we'd go through 2 or 3 years where nothing is going to happen. Turnover could be below the lowest it's ever been, which was 1.2% in 2009. Yeah. So, we have a very interesting political implications. And I think one of the biggest problems for New York actually is voter apathy. We only have about 15% of our registered voters actually vote. And that leads us to have, let's just say, suboptimal policymakers. But we'll see what happens. We'll see what happens. But I'm very, very optimistic about the future of New York. And we'll see what transpires. But it's definitely a fascinating city to live in and to work in.
New York always comes back. always comes back as long as you take the long view, right? And I want to echo some of the things that you've said. Real estate really is something that individuals are into. It's tangible, it's tactile, and you said it best. When someone likes real estate, they go all in and they want to really figure it out and eat, sleep, and breathe it and understand it. It's quite addictive, actually. It's such a great space to be in. And from a wealth generating standpoint, an incredible space to be in all of the different flavors. And Bob, I didn't mention this up front, but I'll say it now. I actually look at the commercial real estate space. I look at it as a couple different verticals, where matchmaking, brokerage is one of the main verticals in commercial real estate, but you also have capital, and you have the owners, and you have service providers. There are so many different flavors of commercial real estate and places where folks are dedicating their lives to understanding and building. So this conversation has been fantastic, Bob. You have shared a lot. Is there anything you'd like to leave us with? Anything about BKREA, or I'm going to leave it in your hands and then I'll close this out.
No, Brooke, just thank you so much for having me on. It's been a pleasure to talk about this. I could talk about real estate all day, every day. To the extent anybody has any questions for me, please follow me on social media, or you can always email me at bk@bkrea.com. Happy to hear from you, answer your questions, talk about the market. Again, Brooke, thank you so much for having me on.
Oh my gosh, of course, of course. So the takeaways, I have to always end on a summary. The takeaways are work on your narrow niche, right? Expertise in a narrow niche really, really helps with real estate understanding. Passion, cyclical market, you're going to be living this for a long period of time, so you can't come in and out. And discipline, make sure you use it. Don't think that you either have or don't have it. You need to access it and move forward with your discipline. On the LegaSHE front, thank you, everyone. We're going to have this on LinkedIn Live. We're going to have this on YouTube. We're also going to have this on Apple and Spotify. So Bob, your words will live on as a great testimony to all of the amazing things you've done throughout your career, your mindset, what you've built, statistics, Little New York conversation. We've covered so much territory, all thanks to you. Thank you for being a friend. Thank you for agreeing to do this. I am so thrilled that we got to have this conversation this morning.
Great to be with you, Brooke, and I look forward to seeing you again soon.
Absolutely. Bye, everyone. Thank you.
Bye.